All right, how's it going, everybody? We have gold premiums in Asia. There's spicy rare earth rumors, troubles with lithium in Serbia, Qatar investing in Western critical minerals, feathers for Africa's golden hat, and a few interesting stories from the junior world in Canada, as it is every week, as well as what I hope will be somewhat of a masterclass on VMS deposits. It's an interesting type of deposit, but also it's in a very interesting yet neglected part of the world with someone who's got a multi-decade background in mining and geology. So a packed episode. It's actually about to be more packed next week because we're cooking a new segment of this weekly show, but I'm not going to give you away too much just yet. I guess you just have to subscribe to the channel and also click the little bell icon and select all notifications next to it if you want to be kept up to date, which you should be, if you love puppies, you want to be kept up to date. That's kind of the deal. Don't click it if you hate puppies, though. But first things first, I'm going right into the metal prices overview, and it's curious, really, because if you had gone away last Friday, like 97% of the people I emailed did, and you hadn't looked at the markets until close on this Friday, you'd notice that, sure, there's some pain in the metals here and there, and silver closed 4% lower, and so the lithium, for example, I'll talk about that later on. And so that platinum and copper is down some 2.5%, but gold is basically flat on the week, which is indeed curious because if you didn't go away and you had kept watching the screen throughout the week, Monday would have gotten you feeling like it's the end of the world. You would have thought, oh, all these YouTube channels, they were right. Jim Cramer was tweeting about gold. Japan was going to zero. Everyone learned a new word, and that being the carry trade. For some reason, everyone made a video about it too. And then a bunch of other things happened in the meantime too that were concerning, and that got a lot of views, again, for macro doom channels. But I'm not covering all of what happened then because I actually already did in an episode with Lobo Tigre earlier this week. So watch that if you care about the macro drivers. But yeah, it seems like the crash for a day was really just that. At least for now. I mean, it doesn't mean that the problems are solved, but at least for now, that's what it seemed like because everything kind of went back to normal. Some things even closed up this week. The top three worst performers on the weekly chart, though, in terms of commodities are silver, as I mentioned, lithium and platinum. So silver is down 4%, lithium is down 3.7%, platinum is down 3.5%. And of course, the widespread fears of a big recession that the week was kicked off with, or actually the prior week was closed with, were quickly cooled down because everyone realized that we can always just print more money. I mean, whatever can go wrong if we inflate the debts to completely Looney Tunes levels at every slight whiff of a potential recession. Like, what could even go wrong? Nothing, right? And it's a special year after all, so we shall have no pain in the stock market whatsoever at quite literally all cost. Just name the price, it will be printed, and it will be paid, which is also why every little blip gets softened out with more money over time, by the way. It's quite like filling potholes with dollar bills so that driving over them feels a little bit softer maybe. But the problem here is that eventually we'll come to the end of the road. And the end of the road is going to be on a cliff. And we won't have money to keep building the road further. There's not going to be any money to build a bridge over the cliff because we used it all to fill the potholes. Sadly, there won't be any going back either at that point because we didn't spend the money fixing the potholes either. We were just, again, filling those potholes with literal dollar bills. And so the road behind us is now falling apart. Nobody ever looks in the rearview mirror, so all issues solved. And the road ahead of us sooner or later leads to a cliff. I understand this sounds a bit dramatic, and I am doomerish. Maybe I should start one of those doomer channels. They do get a lot of views. I'm kind of jealous, actually. But I'm really only like that at the end of the week. I promise I'm a sunshine for the rest of the week. And all in all, the fact that nothing stops this train, to steal Lynn Alden's words, remains bullish for gold, which again had a very volatile week, the type of week that it doesn't matter if the gold price then goes up $20 because you spend $40 buying 40 new pairs of underpants. And yes, I like inexpensive underpants. I don't like any underpants for that matter, but I find it a weird obsession of yours to think about my underpants while we're talking about the economy. Not that I'm judging, though. 24.30 is where gold closed the week, pretty much flat. So again, not much is happening, you might think, but the volatility in the price does kick off actions, different actions from large buyers around the world. as suggested by this Reuters article that I have here that reads, quote, Asia gold premiums firm in top hubs as demand trickles in, unquote. Not a huge fan of these titles, but this was not for me to judge either, as my titles are not, definitely not better. Matter of fact, we can use some help with titles. So let me know what you'd rename this video if it were up to you. A few things to pick out of this article, though. Let's maybe call it 3 things just to make it catchy and keep you watching. But yeah, 3 or 4 things to pick out of this article. The main one being how beautifully this showcases how the physical market in India and Asia as a whole really works. These parties or hubs, as the article calls them, they're typically just consistent buyers of gold, right? Unless when there's volatility, like the current one. In that case, they realize there can be a better time to be buying gold next week, especially because sometimes they'd be buying it by the kilos. And then they try to time their purchases, right? So for India, for example, there's the Diwali festival that's approaching, and that's historically been a very strong period to be buying gold. But the volatility is now creating sort of a wait and see approach. So the demand is not the demand and the premiums are not where they were expected to be before the festival came along, based on obviously historical analyses of how buyers behave before this festival. But any major dip does get bought more aggressively, though. They're therefore adding to the volatility, and thus for, that's a big word for me, but thus for adding to the desire of buyers to time the market. The dip at the beginning of the week was then again bought quite aggressively, though, because premiums, or is it premiums? Someone better let me know what it is. Premium sounds kind of pretentious, so I like it, but I'm kind of a hillbilly myself. So I keep saying premiums. Premiums in India have risen again, but not a lot. They're about $9 an ounce, according to Reuters, suggesting that the timing of the buying might be working for some of these parties. And demand is on the rise as well as a whole, by the way. What else suggests that gold demand in India, which is the world's second largest consumer after China, is on the rise on a more longer term time frame, is the fact that early on in the week, the World Gold Council announced that they will form a self-regulatory body aimed at helping India improve the transparency of its gold market. Because again, there's been more consumer demand over recent years and an expected higher demand over the coming years as well, I suppose. And then we're not only talking about India, of course, I said Asia as a whole, so we cannot talk about Asia without talking about China. So on the Chinese side of things, the premiums are basically double. They're at $18 an ounce. And the article talks about safe haven buying, which is kind of funny, or curious at least, because the Chinese central bank, according to their official statements, although there are counter arguments to the truthfulness in those statements, but the Chinese central bank didn't buy any more gold in July either. So they weren't buying any gold in May and June, and now July is the 3rd month in a row that they weren't buying, according again to their own statements. So you take that with a grain of salt if you'd like. And that's something I talked about last week, but basically China is saying, or has been saying, really, they're saying we want to diversify away from manufacturing and into a more tech and information-based economy. So no stimuli for base metals and construction, but a lower rate for borrowing cheap and hopefully spending it on projects that will never, ever make any money. And so that's apparently, or potentially, I mean, I am looking for a narrative here that suits my halfway developed brain, but based on the Chinese gold premia, catch that, premiums. Based on Chinese gold premiums, it seems like the Chinese consumer is not buying as much gold jewelry as they used to and are expected to in this time of the year. But the premiums on monetary gold products like gold bars and coins are rising notably. Essentially, and again, this is more of an assumption than a fact, so double check everything I say in here as always, but essentially there is a shift from jewelry to bullion, suggesting a growing preference for saving over the consumption of gold. And so Chinese people basically communicating to the central bank that they're not sure about this new approach to economics and would rather be safe than sorry. And so they're stacking more gold products, less gold jewelry. Over in Japan, though, it's a completely different story, similar to what Lobo Tigre told me in our interview, but there everything got sold off, basically. Everything that could catch a bid and was not a high conviction asset, but more of a diversification tool, which years of filling potholes with dollar bills has made gold to be across the world, got sold. Right. So in summary, Japan is behaving as expected. But the next few weeks of gold buying or lack thereof will be telling for their economy. And the premiums in China and India are on the rise. So it is suggested that gold demand overall is rising. And so I'm now watching Asia more closely, not to try and see are they buying and how much gold they're buying, how much they're paying for it, but more like what type of gold they're buying. Is it jewelry or gold bars? And when are they buying it? And well, one of those things would be the price. So I do care about the premiums. Let me know. I don't know. But of course, the fiscal response of the Federal Reserve in the US here will remain one of the most important drivers for the gold price, or the gold dollar exchange ratio, as Lovo likes calling it. And again, I think nothing stops this train. So I think that is bullish for gold long term. Shifting focus to the best performing commodities this week, we'll again have to turn to rare earth elements, with that being specifically germanium and gallium. They're respectively up 5% and 4%, with germanium being the best performing commodity not only this week, but also this month and over the last 52 weeks, so on a year-on-year basis. So it's up 5% this week, it's up 23% this month, and it's up almost 60% year-on-year. So a notable bull market by any measures that barely gets discussed beyond your occasional, political article. And the reason it barely gets discussed is because it's obscure and it's hard to do research on, although to me, pretty much everything else is hard to do research on too. But germanium is chemically similar to silicon, apparently. So I don't know, maybe there's a resurgence of Instagram models having found a different substance to rely on for likes. I'm not judging, it's a business model. But in either case, germanium does play a crucial role in high-tech applications. And it's not quite a metal itself, so it is kind of weird already. But just remember, it is something that is crucial to many tech industries. So it's semiconductors, solar cells, infrared optics, and all sorts of electronics, as well as even for polymerization. It's basically for making of plastics. No, not that type of plastics. Don't even think about that. But there are some medical applications as well to it, though, as well also too. There aren't any germanium mines though out there that are, well, only germanium mines. Germanium is typically obtained as a byproduct of other mines. Most oftentimes it's zinc because of the sphalerite involved, but also sometimes coal when there is a high organic sulfur content, at least, which can contain trace amounts of germanium, though of course not as high grade, or so not as commonly seen in it as it is with sphalerite in zinc production. Now, where it gets interesting, though, is that China, of course, dominates the world output of germanium, the world supply of the final product of germanium. And they're said to be responsible for 60 to 80% of the annual supply, depending on the year, of course. And so over a year ago now, they imposed, as you might remember from some of those political articles, they imposed export controls on germanium and related products, gallium too, which, again, if you're following the thread from the beginning of this video and in previous videos too, I think this is related to their desire to be a more tech-focused economy. But then being China, of course, they want to control the whole process from literally producing the commodities to then finally spying on you through the microwave that you bought for 17 pennies on AliExpress. So again, this current resurgence in prices, which had, by the way, seen little volatility for the last 5 years that came before the current one, it is not caused by a surge in zinc prices, which it typically is. So if there's a surge in zinc prices, surge in germanium prices too. Not now, though, because zinc prices, although up this week specifically, they're actually down almost 8% on a monthly basis because it is a base metal. And again, China did not unveil the expected stimuli for infrastructure and manufacturing, and so hampered the demand expectations for base metals last week. And it's actually likely to continue doing so over the short run, in my opinion, at least. So the surge in germanium prices this year is, at least, again, in my opinion is mostly based on a rumor and not on a proven fact. But my opinion is that it's based on that whole dynamic of China lowering rates instead of issuing stimuli for its manufacturing sector. And the rumor that kicked off that opinion of mine is one that I found in a Reuters article from a few weeks ago that quoted 7 anonymous industry sources saying that there has been staked buying, stacking really, of germanium and other key obscure metals by their National Food and Strategic Reserves Administration. And they're quoting quite specific numbers too. So it was interesting to me that there's 7 people saying the same thing, 7 industry insiders, what they call it. But they're also quoting against quite specific numbers to the tune of 100 metric tons of germanium, although no mention of prices being made, so the premiums there would be interesting too, but there's no mention of that. So true or not, I cannot confirm, luckily for me, as I don't quite enjoy falling out of many hospital windows, but whether the Chinese administration is buying or not, for the time being, or at least for the purpose of explaining this move in the germanium prices, makes little difference, because perception is all that matters, of course, because reality is obviously not a real thing. Nobody should care about reality. We all know that. But so the perception of the Chinese state stacking creates speculation and clearly pushes the price of germanium higher. So quick recap: since the beginning of the year, the Chinese exports of germanium have plummeted by over 50%. Their macroeconomic approach to how the country operates is in the early days of a potentially large shift toward more tech and information rather than infrastructure and manufacturing. And then you have these 7 industry insiders saying that's resulted in strategic buying of what is a very obscure metal in the face of germanium, or metals with an S at the end, including gallium, of course, which is gallium, by the way, similar to germanium, only it's extracted as a byproduct mainly of bauxite, not zinc, which is where aluminum is also extracted from bauxite, by the way. Well, to a lesser extent, gallium also comes from zinc, but again, largely controlled by China. So pretty much the same dynamics ring true there. And so that rumor from those industry insiders has resulted in speculation, therefore pushing rare earth prices higher, rare earths prices higher. And that's kind of my read on why those two rare earths have been the best performing commodities over the last 52 weeks, and also why you haven't heard about it in MSM. And that's happening, by the way. So an alleged stacking of rare earths, curbing exports of germanium and gallium is happening as Chinese copper exports have spiked to all-time highs, with an over 300% spike on a year-on-year basis. So the Chinese are trying to get rid of their copper, basically. Part of it might have to do with the rising copper prices. So it's like, oh, we have these higher prices. We had all this stacked copper. Let's make some money on it. But the main part, I think, is the lack of incentive to build new manufacturing capacity, to build roads and to build houses. You can see some of that in the new housing starts in China, which are now below levels that have not been seen in almost 20 years. So, by the way, there's a thread in what I'm going through here today, or at least in my mind there is. But whether you care about gold or rare earths or base metals, you should obviously care about the fiscal and the monetary policy of the Federal Reserve in the U.S., but you also have to pay very close attention to Asia and China in particular, because for now it seems like the short term is bullish for gold and rare earths, but it's increasingly more likely for there to be more pain for base metals like copper and zinc ahead, at least over the short run, unless the Chinese central bank restarts support for its manufacturing and real estate sector, which they're saying is not going to happen. But again, it's up to you to trust or not to trust what comes out of the administration there. And again, this is a weekly news regurgitation program, so it focuses on the short run, right? And over a long enough time frame, though, the lack of copper supply, and more specifically, people capable of finding, extracting, and refining it in an economic manner, will catch up with the price, and $4 will eventually seem like a joke. But based on these intra-week and intra-month really moves from the most important player in the copper market, that being China, of course, suggests that the short term in copper and base metals as a whole might be painful. So the short term is more likely to be painful than it is to be cheerful. Those are the metals movers this week, and there's 3 more headlines that you need to know about. Well, they aren't necessarily directly related to the movers this week, yet they're still important or good to know at least, and at least that's what I thought. But I've been ranting on for too long, so I'll try to quickly run through them. The first one is slightly related to what I just went over, actually, and it reads, quote, Qatar Investment Authority invests $180 million in mining investment vehicle TechMet, unquote. This article, by the way, I found it on miningtechnology.com. TechMet is a Dublin-based mining investment fund. Essentially, it's a fund. And so they are active in a lot of segments of the market, the critical minerals market. So a lot of segments that make up that critical minerals supply chain, really. So it's including, they're active in extraction, processing, refining, and even recycling. And when I say critical minerals, I'm talking about metals that in their list include, but apparently are not limited to, lithium, nickel, cobalt, and of course, drumroll, rare earth elements. This is a big deal for a few reasons, really. First of all, because it's literally big. I mean, because of the size. I mean, it's literally a big deal, as in this fund, not only is this a $180 million investment that the Qatar investment fund is making. But this fund, the TechMed fund, the Dublin fund, now exceeds $1 billion in valuation. And it's among the largest private investor. I don't know what's happening with my speech today, but it's among one of the largest private investors in a critical mineral supply chain. And guess who else is a large player here? Well, you don't really have to guess because I just told you it's China, right? And so now Qatar is getting involved, but it's getting involved on this side of the globe. But guess who else is already involved in this fund and on this side of the globe? And yes, a lot of guessing is involved in this episode, but it's the US government, which was directly invested in this fund before this investment from Qatar through the DFC. And the DFC is now also, by the way, increasing its investment within this deal by another 50 light. And that's 50 million, right? So notably, moves on a very high level are happening, and there is more and more attention going toward critical minerals on this side of the globe, and it seems like there's bifurcation and whatnot. So it's very interesting to see how this develops. Not in Serbia, though, and that's my best attempt at a smooth transition into the second article. This is also a Reuters article that reads, quote, "Thousands of people demand halts to Rio Tinto's lithium project in Serbia," unquote. And the title is, for once, not an exaggeration. Not too bad of a title, actually, either. But matter of fact, it might be an understatement, because by the looks of a closed highway full of people, it might have been tens of thousands of people. Or a couple of thousands. I don't know. Is it 10, 20? Let me know what you think. I think it might be tens of thousands of people carrying banners suggesting not the most kindest of things happen to Rio Tinto, and chanting more civil stuff like, "You will not dig," and, quote, "Rio Tinto leave Serbia," unquote. And as a little bit more of a background, the administration prior to the current one in Serbia took away Rio Tinto's license to develop this lithium deposit. And that was 2 years ago. And the current administration, so very recent change there, but the current administration ran by Vucic just recently gave it back, despite obviously very unhappy comments from its political opposition in parliament and whatnot. Now, there's a few things that need understanding and maybe a little bit even more context here, because context matters here in this case. But this is Serbia, okay? It's not the most woke of countries out there, to put it mildly. And also, well, I can say this because I'm from the Balkans, but also it's a country known for political shenanigans. I know many countries are, most countries really are. But in the Balkans, it can be quite obvious and even a lower level. So while on the surface, this might appear like a normal, peaceful protest from people concerned about the environment, it would also not be impossible to conceive an idea where it's a political game aimed at bringing down the current government, which gave Rio Tinto its development license back shortly after a previous government took it away, right? And this is a license for what will be Europe's biggest lithium mine once developed. So I'm only bringing this up because it's relating to mining in a way, but I also have my suspicion that this is not really all that much about mining. It is just a suspicion, though, so I'm keeping an eye on it, but I'm not going to declare this another anti-mining stunt just yet. Again, as a little bit maybe even more context here for where my gut feeling or suspicion comes from. Having grown up next door to Serbia, specifically in Bulgaria, paid for and political tools, well, paid for protesting, and protests that are used as political tools, they're not an exception. And I can only claim they're not an exception in that part of the world, although I'm sure it's not only in the Balkans, but it's really only in the Balkans that I've experienced it and seen it firsthand. Fortunately, I have no proof of whether this thing that's happening in Serbia is a paid protest or not. And on the surface, it does look legit. It looks like these people are angry and they do care about the environment. But I'm simply putting forward the idea that paid for protests are a real thing. And I'm sure it's not only in the Balkans, but that's the only place I've seen it firsthand. If this is a real environmentally driven protest, though, then I think it's emblematic for, and that's a big word for me too, but it's emblematic for the overall situation on a global scale, or at least in global West, where we absolutely need more domestically or friendly, at least, produced minerals, but we don't want to produce them in our backyard. And that is a concerning development. We also want better economies, but we don't want them to be based on, dirty mining, dirty manufacturing, dirty building and whatnot, right? We want to be a tech-based economy. We want to work on laptops and whatnot. And so that is a concerning development, which will result in pain for most people over the long run. But also potential gain for people paying attention and investing in the metals that are in short domestic supply, which for lithium doesn't seem to be that much of a challenge, but I think this again just emblematic. Either way, this mine, if and when built, will cover almost all of Europe's lithium needs. It will strengthen the Serbian economy, which is one of the worst economies in the US, in the EU. And again, I can say that because Bulgaria is one of the worst ones too. I think Bulgaria is the worst, and Serbia is not in the EU. I mean, in Europe. I'm going to restart that again. So the Serbian economy is one of the worst economies in Europe, and I can say that because Bulgaria is the worst economy in the EU, but I can also just say it because it's a fact. And so this lithium mine should be built, and it will be built, but political games and environmental delusions can extend the process beyond what is reasonably predictable. So there's no reasonable timeline to expect. And I think there's two things really stemming from this report that can be taken away. Number one is it just highlights that you need to pay very close attention to the community around the projects that you're investing in, but also the political situation beyond what the company tells you, and also the potential for political winds to change over the short run, because that's what happened with Rio, and it's potentially what will happen in the future as well. Typically, companies would want to paint the situation in the most favorable color, right? And it's your responsibility to understand what the community wants and does and how they behave. And so that should be a main topic in your research process. But also, and so second, in terms of influence on the lithium price, Rio Tinto's license being reinstated is, of course, not bullish lithium. So if this goes through, this will cover, as I said, almost all of Europe's lithium needs. So it doesn't seem like that's too bullish, and definitely not over the short run. Nothing really is when it comes down to lithium, based on what I've heard from people I spoke to, at least over the short run. Except for some unlikely scenarios. And if you only account for African production and processing one, there's a bunch of things, but I'm not getting into that. I've done plenty of interviews that have led to that conclusion for me. So that's where I stand on lithium, but do correct me if I obviously miss things all the time. So I might be missing something here as well. So correct me on that. One more thing though, I'm going to keep it moving here. There's more bullish news from around the world on gold. And they came from Africa this week, and specifically Africa's largest gold producer, that being Ghana. They just opened their first refinery, which should have happened years ago, in my opinion, but I'm glad it's happening now at least. And the new facility aims to refine 400 kilograms of gold a day, worth some $20 million. That's very roughly calculated. And the final product is worth $20 million, not the refining thereof. And this is about a third of Ghana's total output as a country. And their total output, by the way, about 4 million ounces a year, and that's worth some $10 billion. So, again, very significant numbers. And those are only the official numbers, which will never really cover the full picture as it is on the ground. Of course, there's a lot of artisanal and illegal mining happening too. But this is great for Ghana, and it's a great step for West Africa, or Africa as a whole, in my point, although I know Africa is a big place, but it's actions like these that help the mining, and specifically gold mining industry in Africa as a whole, mature by curbing, smuggling efforts and just adding transparency, or making an effort to add transparency for its people. Hopefully, although I've never been, like, just how I could talk about what the situation is on the ground in the Balkans, I cannot do that for Ghana. I've never been in Ghana. I don't quite understand the situation on the ground. So if there's anyone listening who has a first-person experience, tell me about it in the comments. But again, on the surface, this seems like a good thing for the locals and for the manufacturing industry. And again, as a whole, the mining industry, not the manufacturing industry. I should have 7 more coffees before I record these things, or I'm losing my words. But this seems like a good thing. On the whole, like on the global scale of things, where the mining industry is maturing, given that some other in Africa as a whole is maturing, given that some other countries like Uganda and Madagascar are following into their footsteps. And I'm convinced over time many more will, which I think will help the overall perception of West Africa as a whole, Africa maybe as a whole, and the perception here is important for it as a mining investment jurisdiction. The refinery, by the way, is only partly owned by Ghana's central bank, for only 20% to be specific, and the remaining 80% is owned by Rosie Royal Minerals of India, which, when taken into account with the article I talked about earlier, where the World Gold Council and India are going for more transparency, it is, again, I think, or I hope, a good thing. I'm, however, biased toward West Africa, and you should know that, in gold as a whole. So I may be providing too rosy of a view, so keep that in mind. And again, provide me with counter arguments, counterpoints. I'm always open for discussions and better understanding of these subjects. And I do miss some of these details, so I'd be happy to read more about them in the comments. That about sums up my metals and mining overview for this week. Please add on to whatever I'm missing. So it's by far not a comprehensive overview. Everything in mining would be maybe a 4-hour episode each week. So this is basically a few things that interested me enough to spend several seconds thinking about them. But Luke, I'm going to shut up now because I know you've been waiting for too long, and you also have prepared a few movers to go through. What I'm noticing here, though, on your list of things that you've sent me, or on the first page of the presentation, is that all of these stocks went up on what I would call a one-person volume, if that makes sense. As in, those are small volumes that could have been caused by one person putting in buy orders and taking out a few of the asks above it. So it's not necessarily telling me anything fundamentally about the company. And I know you you care about the fundamentals most of the time. So why should I care about these things that you've noted here?
Yeah, every week when I create a list, and I can know this pretty quickly with this system that we will launch soon, but I'm thinking about what's the threshold this week. Am I going to show companies from $5,000 onwards for the full week, or is it going to be 20,000 or 100,000? And it's always difficult because there's often one or two companies which I think interesting enough for the list and only trade at $20 or $15,000. On the other hand, of course, it's a ridiculous number. It could be one person indeed buying something on Monday and nothing else happened to the complete week. But I think actually most of these big companies, even the great bears, trade at $10, $20, or $30,000 a week in their early days. Great Bear was a 15-cent company after the rollbacks and also traded those type of volumes in the beginning. So looking for what most people, I guess, do in our sector, at least the juniors and in the retail, is looking for these big 5, 10 bagger, 20 bagger potential. And I think you are looking at those companies. Still, I think if it's only $10,000 in a certain week, it's not very significant. So I often start at $20,000. But I wanted to show that if you look at the top movers between 20% up and 100% up, it's almost all about below $100,000 in the full week. And this is US dollars, by the way, to compare the Aussies with the Canadians and the UK stocks. So yes, I think it's interesting, but I typically put a threshold at 20K. But if I own a company, like you mentioned, this Rio Silver, I don't know that company really well or at all, but and you own it and you own it for a reason. Sometimes a move like this could be significant because there's almost no stock available. It's very illiquid, and a move from 2 cents to 4 cents could be the start of, something going from 2 cents to 15 cents, where it ultimately finances, and then, it's just a start of a move. It doesn't have to mean something, but if you own a certain stock like that, and then it could be, at least of interest to an investor. Right now, I don't really care because you cannot follow every company that goes up by 50% on $7,000. But if it was my stock, of course, I would have noticed and investigated if there's something behind it.
What kind of interested me in you in the first place a couple of years ago, I think 2 years ago, something, when we started talking, besides the fact that, unlike my wife, you wouldn't blame me for being long sub $10 million junior market cap companies, was that you had like you're an idea generator. Like, you always have these, and I think it's kind of known in the sector too. When I talk to other people and I mention you, they're like, oh yeah, he's always got these niche kind of obscure ideas, if you will. Is this part of it? Like, is this part of your idea generation where you look at the volume and then you kind of pick up on ideas that way? Can I use it for something like that?
I look at those things, but I almost never buy something that just doubled or tripled on a little bit of volume and then jump in unless I really see signs that something is going to change. Sometimes these things happen after a rollback. So if a company, after many, many years of sort of failing or not doing anything, rolls back, I mean, there's always a decision behind it. There's people thinking about it. And why would you roll back if you didn't do anything for 3 years and suddenly you roll back? It's typically in anticipation of a new project or a new plan. And it could still take months or sometimes years. But in most cases, I see when a company was very inactive for example, a year, and it rolls back the capital structure, there's a reason behind it. Some people, the board talked to each other and decided this is the right time to do a rollback. But why would you really do that if you didn't have any plans? So you don't know timeline, but you do know that at least there's something brewing in the company. So a rollback could be that, a financing after many years of inactive, or sometimes companies, I call them inactive because they don't do much other than releasing the financials and a very irregular update. So if you then see suddenly a financing more than $300,000, $400,000, $500,000 and they didn't do anything before, it could be of interest. And then if it closes, I look at the number of participants. If it's only 5, then you think, oh, on average 100,000 each, which could be significant. So there's all kinds of signs which happen well before the corporate presentation comes out, or before everybody starts talking on Twitter, which we talked about last week, when everybody wants to, not everybody, when the bigger audience becomes interested in a certain name, and to find those things, and leads volume is also one of those things.
This is incredibly low volume, though. I think it could also be misleading. Like it could just as well go down next week 50% or whatever on just as much volume. So that's kind of confusing to me when I own something very obscure, sub $1 million market cap or something along those lines, and then it goes to like $2 million market cap. Am I to be excited? I think like 2 years ago I would have been. Now it's more like, oh, someone bought some shares, they could just as well sell it, or someone else could sell some shares next week. And then given how tight, something that might be a point too, because you like tightly held stock and stocks with low floats. But when the float is too low, then that could sometimes be a challenge as well, because you have these massive volatility days and you have to hold through it, I suppose.
Yeah, it doesn't really mean much in the, if you just look at a double on its own, it doesn't really mean much. It's just in the context of what did this company do for the last couple of months and years, and why is somebody buying? Well, 10,000 is really like little money, but sometimes you see 20 or 30K, and in the months before there was on average $100 a day, So sometimes it's just a small indicator, like, oh, is something happening? And sometimes then you find, oh, there was a rollback, or there was something else. So it's just one of the signs that I look at, and it's not, a buying indicator or something, but so it's just one of the things I look at. And if I look at these weekly movers up and down, that's also important to know. And because if you want to understand the market, you should also know which companies went up and down in a certain week and why. And that's why we coupled the news to it. It is an interesting data point. And I'm not spending, like, I don't know about Rio Silver or Sonoro Energy or Tarku Resources. So it's not that I know every company, but I have a bit of a feel for every company, or for most companies. And if you see a name a couple of weeks in a row and I didn't look into it yet, then it becomes time to look into it. So it's just having a good feel for the market. What are companies doing? What are the valuations? Why are they going up? What are the reasons? And if you start to understand all these different things, like why is such a company going up? There's not so many reasons that companies go from 2 cents to 20 cents or 10 cents to $1. There's only a couple of reasons. And if you start to see the signs, the earlier signs of something like that happening, and you look at those things for years, it becomes easier to pick up on those signals. So I think it's not, there's no one sign that could completely predict something. But if you start looking at these things every day, and then you do notice when companies become of interest.
I hope if I listen to you long enough, I'll be able to call $10,000 little money as well, and hopefully soon. But no, I know what you mean. In the grand scheme of things, these volumes are just notably low. Do you think that changes? I know you're not a big, top-down money manager, as in managing your own money, I was going to say. But so you don't necessarily care too much about the broad market and how that works. But I also know you pay attention to trends within the ventures exchange or Canadian capital markets. When does this volume change? I mean, this is not serious volume. This is not a serious market. There's no serious money that can go through this market. Do you think that changes anytime soon, and when?
Well, the when question is always impossible. And that's why I don't really care too much about a lot of commentary that talks about, everybody talks about copper right now. Copper is the big thing. And fundamentally, it's probably true, but it could still take years for really things to happen. And uranium, people have been waiting for years and years and years. And of course, the price started moving a couple of years ago. So the when question is always impossible. I just don't want to even go there. But there will be, at some point, interest again in the sector, and then volumes in general will go up. Of course, this is a very obscure sector, especially in Canada. You have so many listings, thousands of listings, way more than in Australia. And Australia has way more volume. So in Australia, you see even the smaller companies, every company is taken seriously a little bit more because there's not too many shells. And in Canada, you have really completely empty companies having nothing that they are doing, hundreds of them, maybe thousands of them. That's why you will always see these companies, even in the bull market, at low volume. But I think the list, as I judge it right now, most of them actually have something ongoing, a project where they do some work, whether it's field work or a bit of surface work or drill work. But these are not shells in this list. Shells even trade below $1,000 a day on average.
What I'm thinking though is at the same time, does this ever change in the way that it was before? As in, I'm trying to look up. I'm not going to be able to find it probably, but I'm trying to look up past volumes, like during past cycles, and it's just impossible that it was that low. Because even on the higher end, I mean, even some of the other stories that we're going to talk about today that you've highlighted, like Adriatic or Arizona Sonora and Copper, big companies, they have some decent volume. They have $1.5 million worth of volume, but this is still, on the grand scheme of things, like people in New York are probably laughing at this. So I'm just wondering, does it ever change, and whose money would change this? I joked about it with Mining Catalyst. Shout out to him, Mining Catalyst on Twitter. I joked about him. There was a joke or whatever, and then I said it was a joke about $10 billion, whatever. It's too long of a story, and I said yes, I'm buying half the sector and consolidating it in one super junior, and he said yes, single-handedly saving the sector, and that kind of struck me because it's funny. I mean, if someone poured $10 billion portfolio into the sector right now, they would save the sector, like Eric Sprott did, I suppose. So do you think that the volumes ever come back in any serious manner?
Yeah, it will, but nobody knows what will be the reason behind it. I mean, at least I cannot do it. If you look at the TSXV, volumes are really at the lowest point since 2000. We had this discussion, I think, a couple of months ago where I made a chart, but it was based on somebody else's chart who this broker at PI. I just forgot the name right now, but he made a really nice chart with volumes, and they are really historically low. And in this market, it's just cyclical. It will come back. I created a number of big winners from the 90s this week, and I posted it on my Twitter account. And most people, saw the rise and the drop immediately after. I was more focused on the rise of those things because these things went 10x, 20x, 50x. This was really an exploration risk cycle where people are willing to put money in the Robert Friedlands, and the people becoming big in that sector or in that cycle, like the big names at the time, are still the big names right now. There's not many sort of, Rick Rule was there at the time, and Friedland was there at the time. Ross Beatty was there. So the people who we consider the goats or whatever we want to call those people are still those people. There's not many new people who are considered the great new people. So what is going to change it? I don't know. But it's going to change. And, my gut feeling is saying it's not very far away in terms of maybe 1, 2, or 3 years, but I have no idea in terms of months or something. And the only reason I'm saying that is that you don't often see, volumes like this and depressed levels like this continuing for. Sometimes they continue 5, 6, 7 years. I think there was a really the bear market from 96, 97 was up to 2001, so 5 years, and that was the biggest bear market I think in juniors and mining in general for the last 80 years, let's say. And I compared that bear market in 2015 to the bear market between 2011 and 15, and I overlaid that chart, and it was strikingly similar. And of course, you can always make a chart look similar and say, hey, this now it's going to end. But I published that article with these similar. Well, it was a complete copy, really a copy, and I didn't even manipulate data to make it look similar. And I said, hey, this is just similar, and it has to. If this has any meaning, we will see an uptrend very soon. But this is, of course, crazy to say. And then really within a week, the TSXV started going up. This was on January 21, I think, 2016. Really sort of calling for the change, and I was completely uncertain about it. I felt like stupid, but I was lucky, and it really started changing, turning, which was a 5-year bear market. And right now, I think we are in a 1, 2, 3, almost 4-year bear market. If you consider 2021 to be the start of, and of course, some people consider this a bull market since 2020 or since 2016 even. But fact is that since beginning of 2021, the TSXV went down from 1,100 to 500 right now, more or less. So yeah, it has been a bad market for 4 years, and it will return. But will it return in a way like 2001, where you really had 10 amazing years? Or would it be like a very short and very aggressive move like in the 90s or in 2016? I prefer the sort of 2000 mode where, slowly the sector becomes of interest again. It's also important in the bigger scheme of things with electrification and metals and, focus on mining. Europe is doing that right now. So maybe it is a more slow, a slow process rather than a 6-month big run and everybody sells off again.
I am just going to blame everything that's going on as some of these bad ticker symbols here, though, because as you're talking, I'm also looking at one of these companies here, Blend Silver. I have no idea what this company is, but the ticker symbol is BAG, BAG, which unfortunately most of these things have become. And I'm reminded of other bad tickers. Maybe we should do an episode on bad ticker symbols. Copper Mountain Mining Corp, before they got sold out, they had a very interesting ticker symbol, CUM. We both know I can't say what that is, but it's funny on the board of COCA, someone, when you put a sell order, it says sell CUM, but then one word. And I'm like, yeah, you might have to if the sector keeps performing the way it has. Anyways, too bad of a joke for anyone to get it. What else do you have selected on here? On the next page, there's a lot of energy companies.
Yeah, I just noticed that energy, I mean, I filtered from $1 million and I suddenly saw only energy companies. So it sort of confirmed to me that mining was not in a good week. Energy was apparently, I wasn't really looking at the bigger scheme of things. And then so I looked at the different industries, and indeed energy was the biggest mover last week compared to technology and financials and industrials. And of course, our little basic material sector was the worst performer. Looking at this year, basic materials, the worst performer. Looking at this quarter, basic materials. So our sector is not doing so well yet, even though we had a little run between March and June.
Okay. So any conclusions or just noting it?
Yeah, just noting it because I think timing is impossible. I just think I really see good value companies right now. But what is going to move them? Indeed, not just the market. What's going to move the market? But I also think that about a lot of companies. Yes, you have a very good, on the surface, a very good copper project, big numbers. We will talk about that in a moment about Arizona Sonoran. But what is really going to drive investor interest? And with a discovery, that's obvious. Discovery works in every market. Ross Beatty joining a $2 million junior works in every market. So I typically look for the things that also work in a bad market. And if you really are depending on the metal, then you just have to have a long outlook and a long period of time combined with dilution that happens in this sector is just destroying a lot of value. So time is a big factor. And that's why I typically stay away from development and production stories, because you're so depending on a metal price doing well.
Mental note, I have to become Ross Beatty in order to move the sector. I don't know if he's got $10 billion. And that's also interesting to me. I think we might have touched upon it last week, but like the richest people in our space, obviously they're very rich, but it's still like only a couple of $1 billion that their net worth. Like there's no one with $200 billion who's in mining, I suppose, or became a $200 billion worth individual through mining, and that kind of reflects the volumes too, I suppose. I don't know if I'm making any sense.
Yeah, in a way. I think the billionaires are, the big names that we always talk about, that everybody always talks about, and those people became wealthy because of the business they were running, the Franco-Nevadas and someone. I mean, that's a real business, really making money for a long time already. Then you have people getting rich. I mean, I think Ross Beatty made a lot of money on projects that are not mines now 15 years later. He sold a lot of copper mines and they are still not mines. So did he really create value? I'm not going to try to blame or say bad things, but you can also sell a project in a bull market that never becomes a mine. Did anyone profit from it other than it being a trade from a low level to a higher level? So yeah, I think there's some people between 100 million net, or 100 million net worth and a billion net worth. Eric Sprott, I think, maybe a bit more, but I don't think there are many. And the different question is how many people made their fortune investing in mining stocks, not running a company, getting a salary, getting a lot of free stock. Because how will you really make 100 million if you didn't get 10 million free shares on day one? And I'm not complaining about it because I think founders should get a decent amount. They started a company, they own the company, and they decide to sell something to people who want to pay money for those risky ventures. But how many people really become multimillionaire by buying in the market, selling in the market, or perhaps participating in normal financings that are available to a lot of people, not just 5 people? Very difficult. I don't think many people make money in the sector investing. I think most people have a side job and talk about investing.
Are you trying to say you're special? Because I mean, I agree with that, but I'm just trying to check.
Well, I still have Gold Discovery that I'm making a lot of money with. So
That's a joke, by the way. I think people are not going to get it, but hopefully soon you will.
yeah.
Let's keep it going because I know Greg is going to be here in the room in a couple of minutes, and we still have a couple of stories to go through. One of those is, or the main stories really of the movers. You have Metal Hawk Limited. That's an ASX listed company. That's MHK on the ASX, and well, yeah, you have it selected on here. Not, hang on, yeah, not all that much volume. Oh no, that's the okay. I'm looking at the wrong. Oh no, I'm not looking at the wrong page. Metal Hawk, you have it selected on here. Not that much volume. $120,000 worth of volume. Market cap is $6.4 million. It's almost doubled this week on what they call a high grade gold discovery. Well, no, they don't call it that. They call it high grade gold discovered at Lannister South, but they didn't call it a discovery because it's chip samples and soil samples. Yeah, why do you have it selected?
Yeah, I don't want to go too far into it because it's indeed very early stage, but I noted it because well, somebody else told me about it. And not many stories really get a lot of traction in Australia right now, and this one for some reason did. Volumes in Australia are typically a bit higher. So for Canadian stock, this would be quite a bit of volume, starting at a $3 million US valuation. Australian, it's about 9 or 10 million right now, the closing of the week. But they did make a new discovery. They were completely focused on the area at Kalgoorlie with nickel and lithium, and like many companies in Australia as well, they switch very quickly when a sector is out of favor, and then they move to gold again. But they picked up some land in a new area about, I think, 300 kilometers away from Kalgoorlie, in a belt which they call a greenstone belt with other gold mines. There was a bit of mining, even 5 million ounces at 5 grams. There's also smaller deposits. So they started exploring in an area that wasn't explored before, and they found this. And this means chip samples indeed. But they found it over a pretty broad area of about a kilometer. So it's nothing that I would suggest listeners to buy right now because it doubled and it's just chip samples. But it's still interesting, I think, that companies can go up, can double on just chip samples because it's green fields, it's really new. Nobody drilled this before, nobody even sampled this before, other than a couple of government samples, which is the reason they went in, because there were a couple of increased soil samples there. So they did some chip sampling and soil sampling, and made a what they call high grade discovery on surface. And so I just wanted to note this story. The stock went up 5x a couple of years ago when they announced they announced it in a very big way, massive nickel sulfide discovery. So they know how to press release something. That didn't really pan out to something because it became a 1 meter intercept of 6% nickel and then 22 meter of 0.3% nickel. So this cautions me a little bit that they are, good at putting out big headlines. But last time it was a new stock, sort of illiquid and also tightly held. Stock went from 18 cents to 95 cents. Since then, it didn't do well, and now, well, with this news, it doubled. I am just watching, but it is. I mean, if you read the news from beginning to end, they describe it well. They really do an effort, I think, to explain you what they are doing, why they acquired the project or staked the land, and that's very different from a company we will discuss after this. I like it when a company really tries to explain what they're doing and tries to explain what they found, so that you can read into the text also, a little bit of their mindset. Why are they doing this? What do they think they have, and what are they going to do in the future? Rather than just wow the market with a big headline. So far I'm interested, but not enough yet to buy it. But something that I like, companies actually taking a risk and trying to find something new.
And it's funny, the kind of the double standards, if you will, that we have in the space, because this is again ASX now, looking at it's a $9.5 million market cap. Obviously not high, but that's about what, 9 million Canadian or 8.5 million Canadian or something along those lines. And I'm reminded of, I can really keep repeating the same name because that's really the only good experience I have so far. But Awali Resources, when I got in, was $3.5 million market cap. It had 4 discoveries. It had a Newmont partnership and a bunch of other things that are way more advanced than chip samples. And so this kind of shows me that how the two, well, it may not be the perfect example, and it's anecdotal, I know, but it shows me how the two exchanges kind of function differently at this time.
Yeah, they do. I think in Australia they really want you to take risks and drill holes, and in Canada people are way more focused on management and share structure and warrants, and I think for good reasons, because if there are 30 million warrants sitting at 20 cents while trading at 10 cents, it's almost impossible to get through the 20 cents. Australia, there's so much volume that stocks just can go from a penny, a tenth of a cent to 2 cents, becoming a 20 bagger. I mean, and with lots and lots and lots of volume, not just sheer volume, also dollar volume. I saw that De Grey last week was trading, I forgot the number, but De Grey was trading at $5 million or $10 million a day. This is just a development project, a discovery, which was made 4 years ago. And looking at De Grey, which is a 4 billion or 3 million Aussie valuation company, they have the same volumes as Lundin Gold, a producer making big cash flow, and giving big dividends to investors. They have the same volume, a development project in Aussie, compared to one of the best miners out there right now in the Canadian markets.
I'm actually more excited about the next company they have selected on here, because I think that might be a Luke special again. Slam Exploration, that's SXL, $2.7 million market cap, $85,000 worth of volume, 3 news releases, moving at about 30% up this week. Their website looks very retro. I don't want to insult them, so I'll just call it retro for the time being. But doesn't seem like they have a lot of cash. At the end of April, they had about $150,000 in cash. They had some marketable securities, so putting the total current assets at about $350,000. So still not all that much in the grand scheme of things and for public companies. But they do have 70 million, 80 million shares outstanding. What is when I see something like that, to you, maybe those are already like very obvious things. To me, there's nothing jumping at me already. What are you seeing here?
Yeah, the fantastic Gold Discovery app gave me this potential discovery alert this week. And they in the middle of the day they announced they halted the stock, and they announced 65 meters of 2.2% copper, which is, as a headline, massive intercept for a $2 million company or whatever number it is. And I do know the name. I looked at it a couple of times, but never really impressed me. So I started looking into it. I had enough time to investigate it before the halt was over, and these are the things I typically buy, because in the middle of the day, nobody really cares, not many people at least, or they don't look at it. They don't get this amazing discovery alert from a discovery app, and they miss it. But this one was a bit weird. I started reading it, and I didn't get any sense of what they've, if you read it, you see this big number. It's an equivalent number, so they have a bit of nickel, a bit of gold, a bit of copper, and different metals, I think, in this intercept, which already discouraged me a little bit. Then I started looking at the language, like, do they announce this as a discovery, as a breakthrough? They didn't, which is, I think, a good thing because at least they are honest about that. But I couldn't really find the history. So I started really looking at historical results from 2012 and 2014. And I came to the conclusion, okay, this is not a new project for them. They have drilled this before. And finally, after looking into a very old presentation, I found this map. And it's the same map they used in the news release, the magnetic map, where this news release, they have just the 2 drill holes. And of course, these purple blobs always, are intriguing, because if you drill into it and you get an intercept like this, then everybody wonders, okay, drill 100 meters further and check this other part of this purple anomaly. And I think it's not completely fair not to show the historical holes, because I found another image in this old presentation with all the drill holes, and this is so close to probably 20, I didn't count them, but probably 20 or 25 holes that were drilled in the exact same areas. And if you think that these holes are different or are drilled deeper or in a different direction or whatever, then at least explain it. But it was very difficult from the news release to find out what they really tried to do with these holes, and why they were so close to these historical holes. And this completely made me like, no, I'm not gonna trade this stock, because I would even have traded it if I thought this was not a discovery, but the market would have liked it. But it was just too obvious that they didn't really think they found something new. At least that's my interpretation of it. Maybe I'm wrong, but I'm pretty convinced that this was not something new. And indeed, looking at the finances, they have to probably raise money. So I thought, well, maybe this is a bit of a pump to get the stock up. But I have to be careful to qualify it like that, because I don't know the real reason. I didn't talk to the company, but I don't like that they didn't release the previous holes, because that would have been it would have been obvious that these holes are very close to historical holes, or maybe even twin. So that's why I didn't like it.
And copper equivalent grades. I mean, off the bat, this is just maybe a note to people. That's something that I didn't quite understand. Get about it maybe 2 years ago when we first started talking. That people got touchy about equivalent grades, but now I get touchy about them too, because this is 0.73% copper is in this intercept that they announce on here, and the equivalent grade is 2.2% copper, right? So there's less than half of this hole is copper, but the headline says grading 2.2% copper equivalent, right? So, well, I understand you have to attract attention and all these things. Announcing it as an equivalent at the top of the headline and then in the summary as well is purposefully done. I mean, and then also includes 31 meters grading almost 4% copper equivalent. That's purposely done. I mean, that's not. It can be done differently. So I'm not a huge fan of equivalent news releases like that. So as I always say, though, if someone from the company is listening or someone who knows the company is listening, send me an email. It's antonio@resourcetalks.com. We will always give you the chance to come on and explain whatever's happening. I talk to anybody and everybody under the conditions that I get to ask my own questions and I don't have to send the questions up front. So yes, welcome to send me an email. Luke, we only have like 7 minutes or something along those lines here to discuss this next pick before Greg comes in. But Adriatic Metals, we'd be remiss not to talk about it. Famous company out there. Everyone loves it. To $24 million worth of volume last week, down 14%. And that's not the big thing. Big thing is there's executive management changes, meaning more specifically the CEO's leaving. Unfortunately, I spoke to Paul 3 years ago or something along those lines. Obviously missed out massively on Adriatic for whatever silly reason that I could justify for myself. But what's the interesting part? Why do you have it noted on here?
Yeah, I was an investor in Adriatic for many years as well, from discovery up to, I don't know exactly what year it was, 2022 or 2021.
Nice.
2023. I don't know exactly. I mean, it's for sure 1.5 years ago or more, but I sold it because at some point it gets, I mean, as I explained many times, from my perspective, it becomes more difficult for me to have an edge compared to other people. But this is a real, discovery made by them, sort of a rediscovery, you could call it, but really, because this was a deposit that was known about, but nobody knew that there was so much gold and copper as well. I think they were looking for zinc only, the Russians, in the past. So I think everybody realized it was a serious discovery in 2018. Paul did an amazing job, really amazing job, bringing it from 20 cents to almost $5. Building this mine in a number of years. I was in Bosnia 2 years ago. He was very friendly, helpful, showing me around, showing me the team. I even joined their company outing. We went on the river with a couple of boats and had a lot of fun. And I really saw that this was a team, a good team with a lot of fun together and building something big. So I have nothing but good words. But just the situation that the company is in, ramping up, in a ramp up phase, one mine, there's just one thing that has to go wrong to completely wipe out a company in one mine operations. And I always am a bit skeptical of investing in those things. I think the company was in a little bit of stress. They had some difficult ground conditions, but they have been signaling that I think Q4 is when they are getting their nameplate to nameplate capacity. And but investors got nervous about the ground conditions. They had also a bit of an issue with a license for the tailings, so they had to probably find a new place for the tailings, which was not a big problem, I think. But so there were some problems occurring, and some investors who were involved exited. I think Orion. So I think a couple of events started to happen, and the company became got a little bit of stress. I think Paul got a little bit of stress because he on Twitter reacted to an investor and became a bit angry and started to use language which is not smart in any case. I mean, he said "fuck off" at some point, which is, I think, in any case, almost whatever a person tells you on Twitter, stupid, because you have a company to defend, and this person behind a handle, who could be anyone, has nothing to defend than a handle that he could just dispose of. So going into a discussion like that is always stupid. But sometimes it is tempting. I was in business in oil and gas myself as well, and got into situations where I was about to write really angry emails and always told myself, sleep one day and answer tomorrow. What's the problem with it? And luckily the next day you came to reason and you think, no, it's not smart to write this email. Let's just write a smart email rather than a very, very angry email. So maybe Paul was under stress. Who knows? Who knows? If you write these things on Twitter, it's not smart. But he did an amazing job. I think it was a retail story where a lot of retail people made a lot of money, and I hope there's nothing wrong with his family or with himself because he's stepping down for family reasons. And I think people have to have respect for that. You can of course start. Go into theories like, is he leaving? Did something go wrong with the mine? Is he sort of fired? Or my impression is that it's real. I know one investor who is really long on the name, and he doesn't know what happened, but he just knows that in the beginning of the day he was skeptical, and he was assured that Paul is really stepping down for family reasons and no other reason. So I think I trust that, and but still. It is a risky scenario in any case. A company with one mine and a loan and a lot of paychecks to pay every month. It is a risky scenario in any case.
Well, what do again, I don't follow the company too closely to comment in any way. I do know there's a lot of rooms for speculation every time a CEO steps down, kind of unexpectedly. When is it really expected? But anyways, what do you do in this situation? I mean, the only thing I look at is the price. Price is truth, as they like saying. I don't agree. That's always the case in Canadian venture capital markets. But I look at the price. Almost $5 is what it reached, and now it's almost $2.50. What do you do in this kind of situation yourself if you hold it? And what do you do if you don't hold it, but you like the asset? How do you treat this?
Well, I think you also have to be careful in, $5. The $4.80 or something was just a tip, it was just a moment, a very short moment. That's why selling is so much more difficult than buying. If you buy, you typically, in this case, it was a discovery, so you have to probably act quick, and you can buy at 35 cents when the discovery was announced. 40 cents was also easy a day or two later, I think. But $5 was just a moment. Most of the the time in the last 2 years, the stock traded between $3 and $4, and before that between $2 and $3. So $2.70, whatever price, is not necessarily a bad price. It's difficult to sell at because you have seen that $5 mark, but $5 was just how many people really sold at $4.80? Almost no one. There was a very quick run up from $3 to $4.50, and if you would have sold in that run up somewhere between $3 and $4, you would have done an amazing job. So selling now a little bit below $3 is not the worst thing that can happen to you if you really think something is wrong. I'm not suggesting it is. So I'm just saying that selling is difficult. If you own the stock, then I would certainly have a phone call with the company and try to really find out if you can get a little bit of more context on, are they able to fix it? I would not bring myself into the situation, I think, often where, you know, companies mining one project because I just feel it's Magna Gold completely failed. Then you have Gold Mountain completely failed. Then you have Calidus in Australia completely failed. And Calidus even drilled 10-meter centers to make sure that they understand the deposit so well that mining would go well. And still, what they found during mining was not as expected, and the company went broke. And now they're in receivership. That company starts to make a bit of money. So maybe just too late. I think one mine operations are so risky that I typically stay away from them, even if it's an amazing discovery like Adriatic. And most amazing discoveries get taken out, and I still think it could happen to Adriatic. So I'm not suggesting to sell. I'm just saying that I would not bring myself into the situation, hoping for a ramp up to go well. But yeah, I cannot give advice on whether you should sell or buy right now. Maybe it's an opportunity. Maybe it's an opportunity to really sell before it completely goes wrong. But based on what the company is signaling and sending out, and what analysts are writing, they are still on track to their forecast numbers. So if you can believe that, then it's probably an opportunity to buy. So I'm not going to give advice. This is just the way I look at it at stories like this.
We have to let Greg in and talk about VMSs, but this has been a good overview. Anything else you want to add here at the end?
Not really. We missed on Arizona Sonoran. Let me just quickly say that I did note their PEA, and I wanted to talk a little bit about it, but because we are a little bit in a hurry, we can't. But they brought out a $2 billion PEA with big numbers. But another company where, you know, what is going to drive the stock? It's an amazing project, but the stock only has gone down from $2.30 to $1.30, and now reacted to this good news. But what is going to bring this company into that next level and actually a rising share price? That's the difficulty I always see with development projects, and that's why we talk about these odd $2 million companies sometimes, because sometimes it's easier to make some money there than even in the best deposits like Arizona Sonoran. And they will probably be taken over at some point, but who knows if shareholders are going to make big money on it. That's the big question in the end. Why otherwise become an investor, I think.
Been about a year since I spoke to George, CEO of Arizona Sonoran Copper. So I'll reach out to him and get him on for an interview, hopefully soon. But yeah, payback period's almost 5 years. That's notable to talk about. They're working under what, a 390 copper assumption. Yeah, there's stuff to be desired, obviously, from this. Although this is to note, this is as far as I could tell from my interview, this is a real company, so this is not a promote or anything.
For sure. It's a real company. It's probably one of the best copper juniors you can buy in the market, I think. But my point still being, stock has been going down for the last couple of years. So how can you really make money in this sector if the metal prices are not going up? And that's what I constantly try to signal here, and that's why we probably talk about these weird stories that most people don't care about.
Yeah, good. Let's let Greg come in. All right, Greg. So you're here today to talk to us about VMS deposits. But I was wondering, as I was kind of going through my preparations and wondering, what should I ask him about VMS deposits? But the first kind of question that popped up into my mind was like, why should I even care? Like, this is not straightforward stuff. This is the stuff that you put a little bit of effort in to understand. Why should I put that effort in? Why should I care about VMS deposits?
Well, VMS deposits, our company is based in Canada. And in Canada, we have over a 100-year history of mining base metals and precious metals in VMS deposits. They occur all the way across Canada. There's 5 major belts, ranging from Newfoundland on the east coast to a belt here in British Columbia outside of Vancouver on the west coast. They range in age from as young as Jurassic to as old as over 2 billion years old. The ones, by the way, we're looking at are Proterozoic, about 600 to 700 million years in East Africa. But they've hosted major well-known mines in Canada, such as Noranda, the Flin Flon Belt, Kidd Creek, major sources of copper, zinc, lead, silver, and gold in Canada. VMS actually stands for volcanogenic massive sulfide ore deposits. It's formed on the seafloor in a rift environment, where like a black smoker, like it's occurring right now as we speak in the Red Sea. These VMS deposits are being formed in the Red Sea from black smokers, which are spewing the massive sulfide material, which again, they can be rich in the metals I mentioned, plus a whole plethora of more metals. They can range in size from small, a few million tons, up to we've seen massive ones over 200 million tons. The ones we've discovered in our previous experience range from 40 to 50 million tons up to Embadero, which was 85 million tons, a world-class deposit, copper, zinc, gold, silver. So as a team, we worked together in the 90s. We've explored all over Canada back in the 90s, and as part of it was a lot of VMS exploration work we did in British Columbia and also in Newfoundland, with success. And then going back in time, in late 2002, 2003, we became the exploration team for Nevsun Resources in Eritrea. And that was our first endeavor to that side of the world.
I kind of always remembered volcanogenic massive sulfide deposits, or VMS, is like a volcanic metal stew. That's kind of how I remember it. It's still VMS, still checks out. And it kind of explains what it is too, right? Or very mysterious stuff, you can call it that too, VMS. What they are known, when I say stew, that's actually funny because it does check out, because they're known for being polymetallic, right? And maybe
Yes.
break down is there a typical composition of what a VMS deposit is, or is it always just different stuff? What does that look like typically?
Yeah, well, I like that term, Antonio. It's a good one, and it does vary. Some of them are more rich in lead, zinc. Some are copper, zinc. There's different classifications, sub-classifications, but the ones that we've had success with in our past have been typically copper, zinc rich, and less lead. But yeah, you're right. They do vary. And then, of course, varying amounts of precious metals as well in gold and silver.
So what's sort of the typical composition that you would ideally want to go after in terms of, I know you like talking about economic geology more so than theoretical geology. So economically, what's the ideal VMS deposit look like from the perspective of the composition in the different metals?
Sure. Well, our sort of in-house goal for every new discovery, we try to come somewhere. We aim for 20 million tons, averaging over 1% copper. That's kind of a very crude threshold to get started. And then, of course, they're also known, and in almost every case I've seen, they occur in clusters. So where you find one, you have the potential to find many.
Is it kind of like zits on your face? It's not the best example to think of.
Well, maybe when I was 17, yeah, I was. It could be like that. Yeah, they do occur. If you compared zits on a face to a map, yeah, that could be a good comparison.
Okay, so 10 years ago,
some are
for
bigger,
you,
some are smaller. Yeah.
So 10 years ago for you, basically, when you were 17, you probably remember that well. But what is where do they rank VMS deposits? And I'm kind of stealing the show here. Luke, you can interrupt me if you want to ask something. But where do VMS deposits rank kind of on a scale as to how expensive they are to do exploration on. If you have a copper porphyry with a potential feeder zone that's like 1.5 kilometers deep, that can be very expensive. What about VMS deposits? How expensive are they to do exploration?
Well, good question. And the approach between exploring for copper porphyries and exploring for copper-rich VMS is completely different. In porphyries, you have massive systems. You're looking at hundreds of millions of tons, of disseminated sulfides. They don't connect. They can range, right now the world's looking at 0.5% as being a good grade. With massive sulfides, as I said, they're smaller in terms of tonnage. We've seen them we've just ranged between 5 million and up to 85 million tons. But the grade is much higher, and it is a massive sulfide. So everything it looks really impressive to see the rock when you find it, the core, because it looks like massive brass if it's copper rich. So as far as the exploration techniques, we use techniques that you would not use in porphyry exploration. We use directly, we're looking for conductors. So we use a lot of electromagnetic methods where we're looking for highly conductive material in the ground. And then the second thing is because it's massive sulfide, it has a specific gravity, if it's massive sulfide, of 4 to 4.5 compared to 2.6, 2.7 for the rock. So if you have enough of it, it'll create a gravity anomaly, which is a very key tool that we use during exploration. But above all that is a very strong understanding of the geology and the structural geology. That's number one. And then you apply the geophysics on top of that.
In terms of the size distribution, you mentioned 20 million tons. I've seen companies talk about a target of 8 or a target of 10, even a target of 5. What would be, I mean, of course, it's always great depending as well on location depending. But in your mind, would a 5 million ton deposit be, could you make that economic, or would it always be on the edge of, being too small?
No. We've seen 5 million ton deposits, VMS deposits that are economic. Of course, it comes to grade, and grade can vary between low copper grade to extremely high copper grades. So a 5 million ton deposit that has greater than 2% copper with gold and silver and maybe zinc would definitely be economic. And of course, there's a potential of finding satellite deposits around it.
Is this region depending? Like, are there regions where you have more big deposits than other regions, for example?
Well, some of the biggest ones, of course, are in the belts in Canada. Kidd Creek, 200 million tons. And also British Columbia, we have some very big ones. Windy Craggy up near the Alaska border is very big. In the Arabian-Nubian Shield on the west side, the Nubian side where we've been exploring, we've seen from 2 million tons up to 85 million tons. So it varies.
There's a favorite Rick Rule quote of mine, although there's probably 700 of those, but he always says that both big mines and small mines have big risks, but it's only big mines that can make you big money. So it's kind of a quote against against getting involved in small projects, if you will. So to that point that you're making here, that kind of goes back to the first question that I had about why should I even care about VMS deposits? That was born kind of from the idea that the average size of VMS deposits is not as big as a copper porphyry average size would be, right? So why you're getting involved in them? Why do you think it's still worth it to get involved in smaller projects?
Well, our goal is we're looking for smaller ones, but our goal is to repeat our previous success in the belt and find the 50 to 100 million ton size. So we tend to refer to anything over 50 million tons as a world-class sized VMS deposit. And that's what we're looking for. And some of the smaller ones lead you to the bigger ones. I mean, they occur in clusters, and the knowledge that we find by defining the hanging wall, the footwall, and the trends can lead to bigger discoveries. And that remains our goal with Sun Peak.
Okay. What about in that process? So why Rick says that again is because he says both big mines and small mines have big risks. What are the big risks for VMS deposits? I mean, I assume because of the polymetallic nature, metallurgy would be one of those. But what else?
Well, there's again the metallurgy, the grade. Now we are finding that we're in the same belt that we've worked in for 20 years, and we know the belt to be metal rich. We've seen it. We're in the exact same rocks we worked in 15 years ago, and so we're applying our same techniques that we've proven work, and we've defined anomalies that we feel could host 40 million tons and up. And that's what we plan on testing over the next year.
Would there be a larger economic sensitivity, if that makes sense, because they're polymetallic? Would the project's value fluctuate more because the different prices of the different metals, basically?
Yeah, that's one of the features of a polymetallic is you got to balance all the metal prices. But typically, in this belt so far, we've been led by copper. Copper being probably the most economic important element. If you go back to the Ismar project, I think about 55 to 60% of the value was in copper. Somewhere 35 was in zinc, and the rest was in gold, silver. And so, we expect that to vary a little bit from project to project, but in the same belt, it probably won't vary that much.
Is it does that make a difference also for the techniques that you use? You mentioned gravity before. Like, does it make a difference if it's copper rich, zinc rich, because those are both, I think, base metals, or perhaps silver, gold rich, or maybe gold, copper rich, in terms of finding these things?
Yeah, well, the gravity techniques we use is looking for something with a high specific gravity. So the massive sulfide will have a high specific gravity, whether it's copper rich, zinc rich, lead rich, or just merely iron sulfide, which is not what we want to find. So that the signature remains the same in terms of gravity. In terms of electromagnetics, the conductivity of it will increase if it's copper rich, and it could be less if it's zinc rich.
What we're talking about a lot of coulds, if you will, here. Can you give us examples of how that process, well, an operating VMS mine right now, and how that process went for them, just so I can kind of wrap my head around it better?
Well, our previous examples of our team, again, we were the exploration team for Nevsun Resources 20 years ago, and we made the Bisha discovery. And now with Bisha, when the VMS outcrops, you get the VMS material is exposed to air and water, it oxidizes. So Bisha was a very special economic situation where the top 30 meters have been oxidized, and it averaged 7 grams per ton gold. So almost 1 million ounces was contained in the oxide zone, which was from the surface down to about 35 meters. So a very, very lucrative start to the mining process. And then 35 meters down to 70 meters was where the water table sat, and which concentrated the copper. So that zone averaged over 4% copper with gold and silver. And then 70 meters to depth was the original VMS material, the unaltered as it was in place 600, 700 million years ago on the seafloor. And it averaged around 1% copper, 7% zinc, and about 1 gram gold. So very, very, very lucrative. The company, it took 8 years to go from the very first hole to production of a world-class mine, which is lightning fast, very fast. And after 1 year, the company had over $500 million in the bank and no debt. So a very good example of how lucrative these systems can be.
Well, that's why I'm asking, and Nevsun can be a good example here, but what I'm really asking is, can you sort of walk me through the process step by step? If I were to get into, and typically where I get involved in companies is way early on the Lausanne curve, so kind of pre-discovery even, what kind of steps do I want that company that I might be getting involved in? What kind of steps do I want them to follow? So they start the geophysics, or like what is that process?
Right. Okay. Well, we start by, of course, identifying the trends. And I mean, in our case, the trend that we are actually working in on most of the Sherry project is the same trend that we worked in on the Asmara project, which is about 80 kilometers to the north. So the trend continues to the south onto our project. It's can be about 15, 20 kilometers wide, and it extends on ours about 80 kilometers. There's an area in the middle where it exists, but it's underneath a layer of basalt rocks. So that's not a high priority. Our high priority is the easy stuff where it actually outcrops. So we define the zones, we do some mapping and some sampling, get to know the trends, and then we apply electromagnetics, first airborne, because it's efficient and easy over the entire property, looking for conductors. And then areas that do become have the right anomaly in the right spot, we follow it up with detailed work on the ground. And once we're extremely confident, that's when we bring in gravity to help us really zone in on the target. So by the time we bring in gravity, we've really got a good feel that we're a good handle on what might be the hanging wall, what might be the footwall, and where the actual horizon, the VMS horizon, might be. So gravity just helps us identify where there may be larger concentrations. So it's a very important tool for when we finally drill.
And I mean,
then at that point, if you look at our past, once we drill into something that is economic, then the fun begins. And then what we hope to achieve here is increase in value, which is driven by the drill. So, going back in time to Bisha, I think we had planned on drilling 5,000 meters in 2004. And we ended up drilling over 70,000 meters in just over a year. And the Nevsun share price was driven from around $1 up to over $9 back in 2004. And it was a drill results driven increase, where every few weeks we put out more results. And that's our goal, is to make a discovery and then build value by delineating the asset with the drill.
And in the Bisha example, that project I think was owned by another company before Nevsun. So what is the reason of picking it up in the first place? I mean, you talked about those belts. Was it just that, or were they already some outcrops that you found and wanted to? I mean, these belts, of course, are kilometers. So you would have to stake a certain property or buy a certain property from someone. So how did that start in Bisha's case? I mean, why did you select that specific property to drill?
Well, back in Nevsun's case, it was before our time with the company. Remember back then, the potential, the VMS potential in the Arabian-Nubian Shield wasn't well known, wasn't understood. It was really the work at Bisha which made it, brought it to the awareness that it is today. So back in the time, the CEO and president of Nevsun had been involved in East Africa previously, and saw potential in different deposit types in the Arabian-Nubian Shield. Nevsun in the late 90s was actually focused on gold projects in West Africa, in Mali and Senegal, and at the time was going through a feasibility study on the Tabakoto project in Mali. When we began to exploration work in Eritrea, and it was more like a secondary project initially, a pipeline project. But after we began drilling, it quickly became obvious of the economic potential of it.
And how did it become obvious? Because I can imagine that you, I mean, if you have worked on many projects, you always are optimistic, I think, as a geologist in the company. Otherwise, why would you even drill it? But at what point did you really realize, like, this could be something? Was that just when you drilled the discovery hole, or were there signs that were giving you confidence in the lead up of that discovery?
Well, it was staged, Luke. At first, Bisha was merely an outcrop, a Dawson, and it had some sporadic gold values on it when they sampled it. It wasn't steady. Wasn't constant. There's a lot of variation to it. But in the first 6 holes, a couple of them were drilled underneath the Gossan and hit some spectacular gold values. By spectacular, I mean double-digit values over 20 meters, and drilled into the supergene copper zone and had over 4% copper over 30, 40 meters. So that was early on, but it wasn't really clear on the size. And I remember at the time I was reading a lot of analyst reports, and they said the general feeling was very good grade, but it doesn't look very big. And we were drilling it in early 2003, and we were moving the drill south, and we were trying to expand it. And at the same time, we brought in David Dowd and myself. We previously had experience with ground gravity techniques in the 90s in Canada, where we applied it. We thought, well, let's try ground gravity on Bisha. And the gravity work started in the north, and it defined the area that we were drilling, where the Gossan was, very, very well. But then as the gravity moved south, we lost the gravity anomaly. And at the same time, the drilling was moving south and the zone was thinning out. But then in May of 2003, the gravity work was now 500 meters south, and the anomaly reappeared. And it was much bigger and much stronger than it was in the north. So it was about mid-May 2003. We immediately moved the drill 500 meters south, a completely blind target on flat alluvium, just flat soil. And we debated whether to drill from this side or this side. In the end, we treated it like a dartboard and just drilled right in the middle of the anomaly, a vertical hole. And we, on site, David Dowd, Scott Ansell, and myself were on site, and we drilled through about 3 to 4 meters of soil to get to the rock, and it immediately went into the oxide zone. So we were quite thrilled. And then each round we watched come out 3 meters at a time for the next day and a half. And we hit in total 164 meters of zone. And from 0 down to 32 was the oxide zone. From 32 down to around 70 meters was the supergene copper zone. And then from 72 down to 164 meters was the primary zone. But we knew at that point that that Bisha was no longer going to be considered small. And that's when we stepped up, the company stepped up drilling efforts, and we got as many drills as we could to delineate it. And that's when the fun began.
Greg, you just mentioned the Gossan that you had first seen. You mentioned the gravity anomalies and whatnot. It sounds like there's a bit of a checklist, if you will, to this. It's kind of like with Sun Peak, you also have this checklist of things that suggest there's more of this at depth. What is that checklist? Like, what do I want to see early on? Like, obviously, you want to see that Gossan outcropping. You said the gravity. What else?
Yeah, well, actually, we call it a checklist too, so it's a good term. I mean, number one is we want to be in the right trends. We want to have already found and defined, just from our geos, David Dowd and our other geos walking the surface and getting a feel for the geology on the surface, that we're in the right zone. And then we typically will do regional soils with more local soil grids to define trends of copper, zinc, gold, silver in the soils. Early on, if we have a large package, we'll try to fly helicopter VTEM, electromagnetics, which will look for conductors in the ground, because these VMSs are typically conductive. And then we'll follow up on the ground where we find conductors, prospecting and mapping, looking for Gossans or evidence of VMS systems. And then if that box is checked, we will then likely bring in the ground gravity techniques, which we only do once we've got a really firm understanding of the geology. So then we'll bring in ground gravity, looking for where there may be massive sulfide concentrations. Other techniques we may use, and we use it at Bisha, we use it at on the Asmara project, is ground EM. It's something that we will likely use on the Sherry project going forward too, just to help refine our understanding of the anomalies before we drill it. give us the best chance we can with the drill.
Has anything changed in recent years in terms of innovation or whatever other techniques that you can use with Sunpeak that you were not able to use with Nefsun?
Well, some of the EM systems have been refined, and you get maybe tighter anomalies. But actually, the real big change was going back to Nefsun, because the ground gravity technique was something that had been known for half a century. However, what happened in the late 90s was GPS became readily available, and you could survey, a marble, XYZ location to a marble accuracy with GPS. So previously, you needed to have a team of surveyors running around. It was very expensive and very slow to survey using transits and theodolites and rodmen to survey the points before you took the gravity measurement. With GPS availability in the late 90s and early 2000s, you could now do a gravity survey very rapidly. And that was what happened at Bisha. So that was actually the big jump forward then. Since then, there's been some improvements in EM and techniques and understanding of it. But that was the major change for us.
Every company, almost every company has a nice map in the corporate deck with red blobs and purple blobs, and they will say, we are going to drill this because we have a lot of confidence. And often you see also soil grids and things. How can you, can you avoid, you have to take a risk at some point, but how can you, have a level of certainty? Could that nice blob coincident with, where you have 3 or 4 check marks on your list be completely something different? And what could it be then in belts like this in the Nubian Shield?
Yeah, well, you're right, Luke. If you did a soil survey on a flat piece of ground and then model it, no matter what, it's never going to be absolutely homogeneous. You're going to have red spots and cold spots. But the importance is understanding what causes it. And in our case, it's that stacked pieces of information that we use, including applying our team's geological knowledge. I'll give you an example. With gravity, again, I keep talking about gravity. Gravity worked great at Bisha. It worked great at Embadero. We had other smaller VMS deposits that were satellite deposits, which some of them did not have a gravity signature. They were too small, but they still had a important economics in terms of feed to the bigger mine. But we have one example where we had a VMS deposit called the Barwa. It was quite high grade, wasn't very big, it was about 5 million tons. But we did gravity over the area, and we identified a parallel gravity anomaly, which was located in the very same orientation as the deposit itself. So we thought, well, maybe this is a parallel, like a syncline or anticline. Maybe it's related. Our team drilled it, and after the first 2 holes, it was clear. It was not a VMS. It was caused by an ultramafic, a different rock type, which was at a higher density and created the gravity anomaly. Now, in that case, there was no outcrop, no understanding of geology beforehand. It was a good attempt because it lined up so well with what we did know, but it only took a couple of holes to prove that this was not a VMS. And so going forward, that is something we always watch out for. When we look at a gravity anomaly, we think, okay, well, is it caused by massive sulfides? That's what we want it to be. Or could it be caused by something else? There's a few indications that, massive sulfides, because you're going, it's a smaller body than just a non-economic rock mass and a much denser, you're looking for very steep lines in the profile. So very sharp jump ups. Whereas if it's caused by a different rock formation that's maybe a little denser than the country rock, you'll get a more gradual increase. So we have some things that we've come to learn that to help identify massive sulfides. But the number one key thing is still lining up other pieces of information and having stacked pieces of evidence. Electromagnetics, soils showing strong copper, zinc, and precious metals along the same trend. And then, of course, number one overall is identifying the geology, the rocks on the surface, and creating a geological model and trying to put all the pieces together. And that's what we feel our team is really good at.
And so when you discovered Bisha with Nefsun, you started, or you together with colleagues started another company, Sunridge. Was that at the same time, and why did you immediately, move forward with more exploration work in a different company? And what did you find over there?
Sure. Well, actually, to go back in time, so Sunridge and Nefsun was often referred to as sister companies. And going back to 2003, Nefsun's main focus was, at the time, was gold in West Africa. And Nefsun had Bisha, but they were really focused on advancing the Tabakoto project, which had just completed a feasibility study and was about to begin building the actual mine. And we were in Eritrea at the time, and identified other opportunities. However, the management team and the board felt that we had enough, Nefsun had enough on the plate, and was really focused on West Africa, which made it possible for Sunridge, the sister company, to then do a deal with an Australian company, which became the Asmara project.
And was that the same checklist? Did you find the same things again, or was it different?
It was very similar. I mean, of course, it was, again, in the Arabian-Nubian Shield. It was very similar in geology. It was a parallel trend. Like what you see is multiple VMS trends. It had some historic work on it. There was Debarwa was discovered in the 60s. It was a large Gossan. It averaged 2.4 to 2.6 grams per ton gold at the surface. A Japanese Ethiopian Geological Survey partnership had put in a shaft and done some underground work back in the mid to late 60s. So that was on the project. But at Embedero, there was a Gossan which had been known for decades, and it had been drilled by 3 or 4 parties previously, and they were just drilling by what we call a geometry, where they find the Gossan and step back and drill underneath it. And there was nothing underneath it. It wasn't that exciting. The Gossan itself only averaged about 1 gram per ton gold, and it wasn't very big. So it was only on that one when Sunridge applied the same techniques that were developed at Bisha that discovered an offset gravity anomaly, which was offset by 100 or 200 meters. And then that target was drilled, and the first hole that into the target hit 240 meters of massive sulfide, and that's when Embedero became significant. In the end, I think over 300,000 meters was drilled on Embedero, and it was 85 million ton copper rich VMS. It was copper, zinc, gold, silver. It went through the whole gamut of resource calculations, pre-feasibility, feasibility, and ultimately, of that 85 million tons of measured and indicated, approximately 55 million tons converted to reserves. So it turned out to be a very, very nice discovery.
Did it have the same zones, like the oxides, supergene, and primary sulfides?
Similar, yes. It has an oxide zone, but as I mentioned, it was offset, and it was fairly weak. It was only about 1 gram per ton gold. It was fairly, I mean, in the big scheme of things, insignificant in terms of the economics. The supergene zone was quite small, wasn't very well developed in that one. The main value was in the primary zone, but that one was also unique because after it was in place, a nearby geological event occurred where a granite intrusion came up right next to it and pushed it all aside, which is why it was offset from the Gossan, but it reshaped it into a very good geometric shape for an open pit mine. The waste to ore ratio on that large open pit was only 2.4 to 1, so quite favorable. And then the other favorable thing that happened was it heated everything up and cooled slowly, which allowed for large crystal growth. which made metallurgy really, really easy compared to other VMS deposits, which was fantastic. So Embadero has its own very strong economic. The copper zone averages actually less than 1% copper, but it's very, very easy mining and easy liberation. So very, very strong economics.
When I'm listening to how you discovered this and looking at your current presentation, and you've identified 24 targets, basically, your high priority targets is what you call it at the Shire project area. It seems like you can have very many targets on VMSs as a whole. So on Nefson's VMS, there was many targets, and this one you have many targets as well. How do you prioritize? Like, what makes one target better than the other? And if you have limited capital, how do you know exactly what to drill?
Well, basically, a lot of arguing amongst our team in the prioritization period. But we apply all the different boxes that we talked about earlier, and also how large the Gossan is, of course, how easily we can make a discovery. If it outcrops and has Gossan to it, it jumps right up, because then it's a very good start. Even if the gravity anomaly is offset, like we saw in Bisha, at least we have something to anchor ourselves at the surface. So the main things are the size of the Gossan, how the gravity anomaly, if we've done gravity, lines up with the Gossan. If it has an electromagnetic conductor showing that it's conductive. Those are the main things. And of course, it takes time. So we don't do all the same work on all 24. We have some main ones. I say maybe 6 of our high priority targets are more advanced, that we've done the work. Others remain, we refer to them as pipeline projects that we're still developing. We're still mapping and sampling, and trying to figure out where they fit on our prioritizing list. But it is tricky, and as I said, they do occur in clusters, so the prioritizing is quite important. What
also is different, I suppose, from Bisha and Asmara is the political landscape, right? They were in a different part of the world. Does that influence your targeting in any way, given where you're in the world? And also maybe a good point for you to just talk to me through the challenging situation, really, that your part of the world, as a part of the world, is going through, maybe not your specific jurisdiction, but yeah, talk to me about that.
Yeah. Well, yes. So there are challenges, and as you know, we had to pause our project for 3 years due to a conflict in the region, and the conflict ended in November of 2022. So coming up on 4 years ago. Throughout 2023, we did trips to the region every quarter, every 2 to 3 months probably, and met with all the stakeholders, engaged with local community, engaged with the state capital, and of course the Ministry of Mines in Ethiopia. And as far as targeting goes, we are coming out of a crisis. The area is opening back up, and some of the roads have been disrepair. The road repair has been happening over the last 6 months, which we're quite pleased about. One of our main targets that we wanted to drill, and we will drill in the future, wasn't easy to get to last spring, and so we pushed it back. We plan on drilling it later this year. We'll have outlined our details on that in the near future. But things are opening up there, and that definitely has been a consideration on our prioritizing, with including access and ease of access, and our community engagement work, where it has been easier to get to.
And how did those let's just call them top targets how did they become those targets? I mean, again, I guess it's a checklist, so we don't have to repeat that. But can you tell us a little bit about why they are right now the number 1, 2, and 3, for example, or just 1 and 2, if you don't mind?
Sure. Well, I'll start with one of our top targets, Anguta North target, and how it was developed, going back about 6 years now. we identified, we saw an area that had been drilled by a previous explorer, and they had about a half dozen holes. They hit quality sulfides, meaning quality copper, quality zinc, quality gold, but very thin intercepts, meaning 2 to 3 meters. But we knew something was going on, and that could be a clue to tie into something bigger. So we took a look at it. We mapped it out, and we thought, okay, this is definitely the rocks that we've seen before in our work history, and we were confident this could be a VMS trend here, and clearly was. So one of the first steps we did was ground soil geochem sampling, and where we sampled lines 500 meters apart that were cross-cutting the trend. The stations were 25 to 50 meters apart. And when we finally got the results back, what we noticed was that area that they drilled showed up quite well. We saw elevated copper and zinc right above where that previous operator had drilled that thin intercept. But then what we noticed is a few hundred meters to the north of that, a parallel trend where there was no outcrop, where the copper and zinc and gold was much higher, and it was consistent for about 3 kilometers over about 6-7 lines that were 500 meters apart. And wow, I mean, it really showed, and there was no evidence of VMS before that there. So then the next step was we were flying the entire project with in 2019 VTEM, looking for conductors, and those areas had conductors associated with them, showing that something in the ground below that elevated copper and zinc was conductive in a linear way that lined up with the soil geochemical numbers. Then we did a lot of work on the ground, prospecting and mapping and taking rock samples. We identified a series of Gaussons that is now known as the Terror target, the Hamlo target, and we call the Anguta South Limb target, where we found exposed Gaussons in some small outcrops. The big piece of the puzzle was ground gravity. We did it over most of that area, and the parallel trend that I mentioned, well, first of all, where the previous drilling had occurred had a gravity low. It did not have a gravity signature, implying to us that there probably wasn't large concentrations of massive sulfides there. But the parallel zone to the north, where there was elevated copper and zinc in the soils, had a very strong linear gravity anomaly, which was very, very interesting. And we actually did that area first with the gravity, and then we expanded it and expanded a few times, and ultimately it exposed the Terror target, which had looks like it's folded gravity anomaly, and it's connected to Gausson. And then 2 kilometers to the east are Anguta North target, which has a very, very strong gravity signature, which looks like a VMS. It's got very sharp gradient, showing that it goes from lower specific gravity to something very strong, very fast. A signature similar to what we saw at Bisha and similar to what we saw at Embedero. So on the surface there's no outcrop. It's kind of more like a farmed fields, plowed fields. There is some evidence of the right pattern of hanging wall, footwall sequence that we've seen further along strike. And then the drilling that we did last spring in May, we drilled the Terror target, which is a much weaker gravity anomaly. It was distinct, but it was tied into the Gausson. Our techniques worked. We encountered new VMS mineralization that was unknown before. But now that we have that, we've defined the hanging wall, the footwall, the mineralized zone, and we can follow that right at Anguta North. So we are more confident than ever that Anguta North, that gravity anomaly, is indeed caused by a massive sulfide, and it might be the heart of that VMS system in that area.
Since it's such a big anomaly, does that also make it more difficult, because you have to start somewhere? Maybe also expectation is high. So are you going to do the same thing, drill a vertical hole right in the middle again, or is it a bit more refined this time?
Our team arguing and debating, and we're always, as we do, we've got a 25-year-long history of arguing, debating, discussing, and then coming to terms. We are looking at perhaps doing ground EEM first, We're talking to some consultants that can just to help fine tune the drilling. But that may or may not happen. We are at the point where I think we're confident enough, based on all the tools that we've developed, including the new information from the recent drilling, that we are comfortable enough that we may go and drill it without VTEM, not VTEM, sorry, ground EM, electromagnetics. But either way, that target will be tested.
Well, you mentioned that it's had similar size to maybe Bisha and Madero. Not sure if there's also a level of strength that you can measure. Like, is it as the same sort of gravity strength? And what is the risk here? I mean, you've drilled Terra, which is probably a kilometer away. Could this also be an ultramafic, as you said earlier, where you have an anomaly, but it's nothing, it's just something else?
Well, that's something that we're always leery of, but now we are more confident than ever because of the information we got out of Terra, 2 kilometers to the west, that we have defined the hanging wall and footwall. On the order of magnitude, it's like 5 times the strength of the Terra anomaly, so it implies it's much stronger. It's more like what we saw at Bisha. But now we have a very strong understanding of the geology, and we are very confident that that anomaly is being caused by a massive sulfide. Again, what we don't know is how deep it is. We don't know the grade of it. Terra, you saw our numbers. We have there's copper, there's zinc, there's gold and silver, but it's lower than we've seen on other of our targets in this belt, including the Melly target. However, we do see in all examples of our past, we've seen zonation going on, and we think this is just your typical zonation, which is part of the geological model. And that maybe the Anguta North gravity anomaly is indeed the hotspot. We don't know how deep it is. The modeling kind of moves it around. It's a variable. It could be near the surface. It could be deeper. And again, going back in time, the initial geophysical modeling at Bisha told us that Bisha was quite deep. It turned out we hit it at surface. So there are some unknowns, and anomalies do move around with different processing techniques. But we are more confident than ever that that anomaly is now being caused by a VMS system. And
is that going to be your prime target then, or are you going to drill other targets as well? Is it and at what point would you say this is our target and we're going to leave all the other 24 or whatever number you have on the sidelines? I mean, what do you need to see for that?
No, it's up there. It's up there. I don't know. I mean, again, we can rank that tied for number 1, perhaps, with the Melly target. Now, Melly, which is located about 40 kilometers southwest of Sherry, is where we had previously drilled. We've got some great results there. One of the highlight holes has 35 meters of 2.4% copper and 2.4 grams per ton gold. So very, very high quality sulfides. We began drilling there in 2020 before the conflict began. And at that point, we were really trying to find the eastern edge of it. And we were trying to, we didn't know that we'd be halted, but we were trying to find the eastern edge, which we've done. It probably continues to the east. It looks like it's faulted off, but it probably continues a few hundred meters to the east. But for now, that body, we've defined the eastern edge. On the west, it remains open. If you go about 1 kilometer to the west, there's another very strong gravity anomaly, like right along strike, and a weaker anomaly which leads right up to where we had the 35 meters of 2.4% copper. And then going 2 kilometers to the west, late in part of the 2020 program, we drilled a Gaussian called what we refer to as the far west target. And we hit a massive sulfide Gaussian. It had 18 meters. It was just a shallow hole at surface of almost 2 grams per ton gold. So we haven't done anything in between yet. So that also remains a high priority target. We believe they're all connected with the very strong gravity anomaly right smack in the middle. So I would say, Luke, your question is, these are both tied for number 1. So it's playing with logistics a bit, and commitments on each license, which we have to pay attention to in this business, to which one gets drilled first.
How many drill rigs are you going to need to go through that program and complete what you were hoping to do here?
We have one already. The contractor that we've been using is setting up in the country and sending in more drills. So we'll have more drills available. But we're still working on the plans for the next drill program, which will begin after the rainy season and after the harvest season, perhaps, so late October. But both the targets I just mentioned are top of the list. We're working on logistics or what makes sense to drill first, and then when to add second drills and third drills.
What do you say when to add second and third drills? So it is timing dependent, but I suppose it's budget dependent too. How much money are you budgeting for the whole program?
Sure. Well, basically after the fact, looking at our drill costs from the last program, we were very, very efficient. We averaged close to $150 per meter of drilling. So with that, we can drill 5,000 meters. We have over around 3.3 in the bank, or over 3 million in the bank. We can easily drill over 5,000 meters. And our goal, of course, would be to make a major discovery. And on both the Melly target and on the Anguta North target, we'll now be testing the major heart of the anomalies.
And money wise, how much money do you have right now? I think we brushed upon it briefly, but I suppose you're going to have to raise money. What, before completing it, after completing it? When are you hoping to do that?
We're hoping to do it after. We have enough to do that initial program. We're hoping to demonstrate the value and then have the reason to raise money to go into delineation mode. Just like that's the same formula we've done in our past.
Okay. So do you have any idea of how much money you're going to need for that second step? I mean, once it comes down to raise capital, how much money are you going to be out looking for?
There's a lot of ifs and ends, of course, on that question. The big if is what do we hit? And how much do we think we need to do a proper delineation? Do we raise it all at once, or do we start by delineating and start to demonstrate value and do it in stages? Those all remain on the table at this point. But if you look at our past, in very ballpark numbers, 5 million to 10 million to fully delineate, and then another 20 to 30 to go into feasibility study. And what we're hoping to create is, just like our past, is a runway where we demonstrate the value, we involve all the local stakeholders, the regional government, the provincial, state government, and the federal government, and move as fast as we can at that point.
How is the market interest for it? I mean, East Africa is not for everyone, I think. Some people just focus on Canada only, or maybe Western world, perhaps. What is the level of interest right now, especially after the conflict?
Yes, there is interest. There is always interest. There's always people that prefer to invest in North America and other jurisdictions. But we have had success in the past in this region, and the interest remains. And I think people now more than ever understand that the potential to create a significant asset by drilling.
And are you competing with people? Are there other players in the region looking for money as well, or is it just Sunpeak and Ethiopia?
I don't really see it as competing, Luke. I mean, other companies in the region having success only helps us, and vice versa. Some of our major, our major neighbor is Newmont. Newmont was drilling before the crisis, and they are located to the north, west, and south of our Melly deposit. So their success will only help us. So I don't see it as competing.
What about marketing for VMS deposits now versus when you were marketing for NEFSA? And how are you finding the overall interest in this type of deposit? I know in different cycles, there's interest for different stuff. This cycle really seems to be focused on very high grade gold. Maybe it always is. But yeah, how are you finding the interest or the appetite for VMS deposits now versus how it was during your last ride?
That is the same. I mean, now there's more knowledge because of Nevsun and because of Bisha, because of the Asmara project, because of other things. There's been some large deposits defined in Sudan along the same trend. If you're drilling these things and you're successful, you're likely hitting significant copper and significant gold. That hits a lot of spots in the market and draws a lot of attention to your project. So once you've had success and maybe made a discovery, that helps a lot. And people ask me what I think. Are we focusing on copper or focusing on gold more? We're focusing on VMS, and I don't know. I read the same analyst reports that everybody else does. I can read many saying that copper is under a shortfall and the price is likely going to go up, and gold predictions are going to go up. But I'm not a macro economist. We are just looking for robust projects that can stand a 25-year-old mine life like we've done in the past. And we're just looking for significant grades of copper and gold and size.
Talking about marketing, how are you going to be doing marketing for, and again, it's a combination of, it's a VMS, but it's also in that part of the world that, as you mentioned, just went through that challenging thing. How are you doing it? But also where? Like, are you going to mining in Dabo, but then going to London and then going to PDAC? Or like, well, what's the combination? What's the strategy really for targeting marketing here?
Well, being in Africa, we've typically done for decades all three of the ones that you mentioned. Indaba, marketing in London, marketing in Europe. We found that the story in East Africa often tells well in London. They understand the risk reward of Africa and East Africa. And they're familiar with the Nevsun story, the Sunridge stories, and other success stories in the region. So they understand the value of creating an asset and what can come out of it. So we do focus a lot of our efforts on those circles. But we also keep trying on other things too. You never know. We try to target a combination of institutions and retail networks. And a lot of the investors have been successful in investing in the region before, so that's why they're there. So we do have that as a beginning point to focus on.
Well, what are you budgeting in terms of marketing? Is there a certain percentage of your G&A that goes toward marketing? Is it a fixed amount of money, or like how do you determine how much money you want to spend?
Well, in this business, you want as much money to go in the ground, and the best marketing for us will be a drill hole. So our number one goal is to make what we feel is clearly a large economic discovery, whether that be at Anguta North or Meli. The marketing will then come behind it and be a lot easier. But we don't have a ratio. Through the last few years, we had cut marketing down to absolutely zero because the time was not right. Coming up on after rainy season and harvest, and we're drilling, we'll try to get some eyes on us. We'll do some marketing, try and as hard as we can to be efficient with our marketing dollars, because we don't want to just market. We think, again, we're confident that we're going to be successful with the drill. And once that happens, then the marketing budget will go up, because we want to try and tell the story and get all eyes on the story. They're fun stories. They can create immense value. And at that point, we'll try to get as many eyes on us as we can, supported by our drill results.
Got it. Greg, I think at the beginning when we started talking, you were like, I don't know if there is enough to talk about for an hour. I think we can talk about at least for another couple of hours. But let's maybe close it off. I will be following the story. I know Luke will over the coming years, so we'll definitely have more conversations. But I'm out of questions for now. Luke, anything you want to ask here at the end?
No, let me just mention that I'm conflicted because I own stock in Sun Peak for a number of years already, and I enjoy the story a lot. I hope some people also enjoyed it, and we'll look into it. And thanks, Greg, for joining us.
Well, thank you for having me. Thank you, Antonio, Luke.